So we're going to take a look at an adjustment that requires us to transfer a certain amount of money to the capital reserve. So it would only it's only appeared once so far as of 2021 in the 2019 exam. But what is a capital reserve? So the capital reserve is a reserve which is created out of the profits of the company generated from its non-operating activities during a period of time, and is retained for the purpose of financing the long-term project of the company or write off its capital expenses in future. So a capital reserve is an account on the balance sheet to prepare the company for any unforeseen events like inflation, instability, need to expand the business, or to get into a new and urgent project. So as an example, we can talk about profit on the sale of fixed assets or profit on the sale of shares or whatever it might be. So it works in quite a different way. When a company sells off its assets and makes a profit, a company can transfer the amount to capital reserve. So since a company sells many assets and shares and can't always make profits, it's used to mitigate any capital losses or any other long-term contingencies. It's got nothing to do with the trading or operational activities of the business. So it's created out of the non-trading activities, such as the profit and sale of land or whatever, and thus can never be an indicator of the operational efficiency of the business. So another thing that is important is nature. It's not always received in the monetary value, but it is always existent in the book of the accounts of the business. So it's just important to know what is capital reserve. It's just a good bit of money taken from non-operating activities of the business, and it's just put into the finance by section of the balance sheet. So you can see here in the 2019 exam, adjustment number 9 part 4 said the directors recommend that a transfer of €10,000 should be made from profit to the capital reserve, and I corrected it back in 2019 in the summer, and to say quite a few people didn't really know how to deal with it. Okay, so capital reserve will go into the finance by. All right, and again, it's very, very, very important that you get this order correct from the finance by down, and it's also very important that you get this order down from operating profit down. Okay, so nobody knew where to put this. Let's transfer to capital reserve. So just put it underneath the dividends paid. So you've got operating profit, add investment income, less debenture interest, less corporation tax, less dividends paid, less transfer to capital reserve, and that's your retained profit plus or minus profit and loss balance on the 1st of the 1st, and that is equal to the profit and loss balance 31st of the 12th. So over here, your finance by has to go creditors amounts falling due after more than 1 year, so that's where your debentures is going to go. Then you're going to have your capital and reserves, you're going to have your ordinary shares, your preference shares, you'll tot them up then as you're doing the question. Then you'll have reval reserve, then you'll have capital reserve, and the P&L balance will always go last before the capital employed. So this 45,000 came from the trial balance. All you have to do here is write let's transfer to capital reserve and take the 10,000 away, and then you will add the 10,000 there, and then you've got 55,000, and that is basically it. So the tough thing about this is just knowing the layout of your accounts, and that's it. Okay, so that is basically it. So that's how you would do a transfer to capital reserve, but from your notes now you'll see this layout that I've given to you, and so it's really, really, really important that you get that right, because if you mess up the order you might not get the marks. So it's a very easy adjustment, and you might see it again in the near future.